seen cases where the deductible is so high that you're effectively self-insuring your roof. There's no way the damages are ever going to exceed that deductible threshold based on the percentage. So, and when clients realize that, it's quite a wake-up call. So,
hey everyone, welcome back to the HOA Simplified Podcast. I'm your host, Neo. Joining us today is Trey Griffy, a community associations insurance specialist at Nesbit Agencies. So Trey here has been doing insurance for over 13 years with Nesbit. He has worked with over 250 associations across the nation, and he's known for helping boards and managers really simplify that complex insurance piece and protect their communities with clarity and confidence. So Trey, just to start us off, tell me a little bit more about yourself and Nesbit Agencies.
Yeah, well, thanks, Neo, for having me on today. I really appreciate the opportunity to just talk a little bit about, one of the most misunderstood pieces in the HOA world, and that's insurance. Insurance, I think, as we all know at this point, has been a hot topic recently with rates on the rise, less favorable terms, carriers exiting the market. We'll get into all of that, but just real pleasure to be here with you today and support the HOA Simplified team. Trey Griffy with the Nesbit Agencies. I've been with Nesbit Agencies since I graduated college for going on 14 years now. And we're a family-owned and operated agency based out of Minneapolis with 17 offices nationwide. That actually might be 18 now. We are growing. But I manage our Southeastern division out of Charlotte, North Carolina. But I do write business nationally. I write quite a bit up in the upper Midwest where our home office is. But I also write business all over the country, obviously including the Carolinas where we're located now. So, I've kind of seen. I never like to say I've seen it all because there's always things that surprise me. I learn new things every day in this industry, but I've been around the block a few times, so I have a pretty good grasp of market shifts, trends, tips, and tricks that can really, hopefully, educate boards and management professionals on kind of how to navigate what is really a tricky market and a tricky industry right now.
No, absolutely. And, especially, we're located in California, and I think similar goes for the Carolinas. Like the premiums are increasing in California because of the fire red zonings. A lot of insurances are pulling out. So it's a tricky situation and a tricky time for a lot of board members. And it's amazing that you've been doing, insurance with Nesbit for 13 years and a lot of communities that you served. But let's kind of wind back in time. What first brought you into the world of specifically like HOA insurance? Yeah,
so it's kind of funny. It's really just a kind of a personal connection, personal story. So one of my best friends in the whole world, a couple of them, their dad runs a large property management firm. And I graduated college kind of towards the tail end of the recession. So the market was a mess, and I saw an opportunity. I jumped at it to go work for that management company's insurance agency. So I kind of just stumbled into insurance by happenstance, and that naturally, with that property management connection, kind of turned into, my niche, for lack of a better term. And that's kind of just how I've come up in it. I've done other things too, but property management, I keep coming back to community associations. And that's really, at some point along the way, I just figured, well, hey, this is what I know and I'm okay at it. So why not just pursue this? And it's been one of those things that has really grown organically. It's really relationship based. I work with a lot of good management companies around the nation, and I've really nurtured those relationships. And they've been very generous with opportunities as well. So it's kind of just a natural outgrowth. They say it's who you know, and that's ultimately what got me into this field. And here I am, 13 and a half years on, still doing it. So with the same company I started with, which I take a lot of pride in.
Yeah, I think you're being too humble. I think okay at it is.
It's very kind of you, but like I said, I learn something new every day. So.
Absolutely. But 13 years, 250 associations, that's definitely more than okay. I think at least. And so with that kind of experience, as well as associations nationwide, right? It's not just the Carolinas. How has that really changed your perspective or shaped your perspective and your approach to HOA insurance?
Well, I think for one, having a national reach has really helped kind of sharpen my sword. I know what's going on the West Coast. I know what's going on the East Coast. I know what's going on in the Midwest. And yeah, there are a lot of macro trends that overlap, and that we've seen a lot of that over the last couple of years. But there are unique kind of idiosyncrasies from region to region. So that's really helped me become better at my craft. I feel, relatively comfortable. I write more associations in some places than other. I'm kind of
Right.
a jack of all trades though, because I do handle a national reach. So it's been really good getting to see, again, those macro, but also the micro trends region to region. So it's helped me to become a better advisor for my clients. And it's really just made me better at my job.
Yeah, that's amazing. I don't think I know a lot of insurance folks who can cover the region that you cover. So like you must have like a lot of knowledge just nationwide in terms of, insurance, as well as, you dive deep into insurance and then you dive into the laws and then it just kind of like the knowledge kind of just expands like that. So
It
that's
does.
very,
And a lot of that, I got to give our agency credit. We're a family owned and operated agency that has really put a lot of resources into giving us the capability to write all over the place. We maintain a pretty large suite of contracts with admitted reputable carriers across the nation. And so, to our agency and to our carrier partners, I got to give a lot of credit. They've kind of given me the ammunition to be able to do what I do.
yeah, absolutely. And we're really here today just because we're both passionate about community associations and HOAs. I'm on the management end, you're on the insurance end, but the goal is the same, right? The goal is help protect and serve these HOAs. And throughout the years, are there any specific maybe stories that you want to mention that was especially rewarding to you before we really hop into the details?
Sure. I got plenty of war stories to dig through. Any board member, any management professional will know, you get those calls and, you sit in those contentious meetings with boards and, we've all been there late on a Tuesday night, hashing out assessments and whether do we file a claim, do we not? Here's one that sticks with me. And it was early on in my career. It's Christmas Eve. Automatically, you can see where this is going. Christmas Eve, I'm with my family across the country, nowhere near, this client that calls me. He calls and says, "Hey, our townhome building is on fire." This is Christmas Eve, 10 p.m. And thankfully, I pick up the phone and I kind of walk him through next steps. I said, obviously, I'm not there right now, but I was happened to be flying out the next day anyway, which worked out great because I was able to get on site the very next day. But, I took that call at 10 p.m. on Christmas Eve. I talked to the fire department on the phone for my client, kind of walked him through next steps, mitigation. And at the end of the day, a couple months down the road when that claim closed out, I got a handwritten letter from the board president that was really, really rewarding. Something along the lines of, not all agents would have picked up the phone, much less gotten on a plane, the next day to be there. And, again, I was going to be on a plane either way, but made sense to go straight to my client as soon as we got wheels down at the tarmac. But things like that, that was a rewarding one for me. And it really, it was a really tough situation for the client, but ultimately it had a happy ending. Claim was covered, they were made whole, everyone was happy. So that's kind of one of those off the wall stories that happened early in my career. So I wasn't as seasoned as I am now. So I hit the panic button a little bit at the time, but we got it done.
Wow, Christmas Eve, huh? I mean, I think I think because the industry that we're in, it's such a people's industry. It's really important to go above and beyond. And I think just from my experience, the people that succeed are the people that really take that personable approach to all. Not saying everyone should work on Christmas Eve, obviously, but that.
Well, I made the mistake of giving him my cell phone number, so. I'm kidding. Well, I did give him my cell phone number, but it worked out. But yes, I know what you're saying.
Yeah. Oh wow. That I haven't heard that story before.
Yeah. So no, I think what you're saying is spot on, though. I think, and it's not just our business, but any business. I think. I think a lot of people, they think insurance is very transactional, and yes, you are buying a product, but there are agencies out there and agents that they stop at the sale. They sell you, they get their commission check. You hear from them once a year at renewal. I personally, that doesn't align with my philosophy. You write the business, that's where the job begins.
Yeah.
That's kind of how I operate. And I'm sure that's how you guys operate too. It's not just, it's not a one-time hit. It's the ongoing service that really makes an impact.
Yeah. I think all board members that we manage have my cell number, which is also concerning.
Yeah, right. I always joke about that. I try to be very careful with that number, but we live in the 21st century, right? So my wife, I lovingly say she hates me for it. So she's actually, I'm doing this out of my house right now. She's in the other room, so she can probably hear me saying that, but she knows what I'm talking about.
Yeah, and obviously I always give my cell number just so that I don't miss any calls, and I want to be there. But let's kind of switch gears into really, and I think this is a question that maybe is asked and answered a lot of times, but something that's still very important, and that's the essential policies that HOAs or condo associations, any community should carry, right?
Yeah.
So how would you kind of define that?
Yeah, so kind of the nuts and bolts basic policies that every association should carry are going to be property insurance, particularly for multifamily if the association is responsible for the buildings. Single family HOAs are a little bit different in that they don't always necessarily need a property policy if there's no commonly owned property. But typically what we're talking about for like a multifamily would be property, general liability, crime, employee dishonesty, directors and officers, an umbrella policy, and I'm going to throw in workers' comp as well. I think workers' comp is also critical, whether you have employees or not. We can talk about that more if you want. But those are kind of the nuts and bolts basic policies that I think are critical for every association. Yeah,
absolutely. So we, as you know, Trey, we do small HOAs. Do you think that ever differs when the HOA size kind of go below 50?
Honestly, personally, I take a pretty conservative approach. I've seen enough in this, crazy world to know that it doesn't really matter if you're a 300 unit association or a 25 unit association. You're still susceptible. So I typically recommend the same coverage package or the same lines of coverage. Now the coverage limits obviously might differ for a large association versus a small one, but the fact remains the coverage still needs to be in place at whatever level that is. So no, it really doesn't differ, at least not for me and my clients, unless there's some kind of weird idiosyncrasy about the property that might warrant it. But no, I typically recommend that for small and large associations. And I handle them both. I write plenty of small ones and plenty of large ones. So it kind of runs the gamut.
Yeah. Okay. Definitely. And I know you mentioned, directors and officers, umbrella, right? Like we know what these terms mean, but our viewers may not know what these terms mean.
Yeah.
So are there any specific, the biggest misconceptions or kind of misunderstandings of these specific insurance terms? Could you touch a little bit more on that?
Yeah, no, that's a really good question, Neo. So I get these questions from board members a lot. Yeah, these are kind of industry terms that, your everyday board member might not understand. And like, for example, I get a question all the time on why do we need directors and officers, D&O insurance? And that's actually, I like when I get that question because that's usually a pretty easy one to answer because that is for the board. That's
right.
Question for the board. So let's say, Susan is, someone makes an allegation that she picked a vendor that caused damage to the association or she mismanaged association funds. Any kind of allegation of potential negligence against Susan in her position as the board, a homeowner or group of homeowners could potentially sue her personally. So directors and officers insurance is that backstop. So it comes into play when something like that happens. It actually protects the board. It is there solely for the board's protection. So when I get that question from a board member, and I explain it, they're usually, their response is usually, oh, well, I didn't even know that. That's great. That's really critical coverage for me. There are a lot of policies out, well, not a lot, but there are some carriers that are offering really, really neat coverage features like lifetime reporting for a board member. If let's say that lawsuit against Susan, she's served on a board in, Kansas, and she's retired and living out in, the desert in California, living the retired life, playing golf every day. She gets a notice in the mail from an attorney saying that she's being sued for something she did 3 years ago on the board. Well, under certain policies, she could still have recourse under that policy that was in place at the time she was on the board. So yeah, there's lots of different cool coverage features that you can unpack and add on depending on who you place the coverage with. So D&O is an area I see a lot of confusion on. Crime also, crime, it involves effectively if a board member or an employee was to embezzle association funds. And we do see those claims, unfortunately. It's the world we live in. But there are policies, and I would argue any good policy also extends that coverage to the property manager. Not that NEO and HOA Simplified would ever run off with association's funds, but if something were to happen to that effect with your manager, no matter who it is, you would have recourse to collect those funds back if a third party potentially ran off with their money. So really, really cool coverage features on a lot of these policies. And I will say that not every policy is created equal. There's a lot of policies that are just effectively endorsements on your package policy that covers your crime and general liability. Then they just throw in D&O and crime coverage. Well, I would argue that is almost always going to be less effective than purchasing a specialty standalone product for those specialty lines of coverage. So those are a couple areas where I see it a lot. But yeah, and I guess I should touch on, I mentioned work comp earlier. This is another big conception I get a lot. Why would an association, a nonprofit HOA with no employees, need to carry workers' comp insurance? And I think it's a really good question, and it's a fair one.
Right.
But the reason is, in most states, if you're hiring labor to come work at your association, let's say you hire someone to come patch up some siding, and they don't have their own workers' comp insurance in place, and they fall and become injured, or whatever happens, they become injured while they're working for you, the state, they call them what's called a statutory employee, which basically means they are effectively your employee at the time of loss, meaning that you, the HOA, could be held responsible for their injuries, their medical payments in their lost time. So I recommend that you always carry a workers' compensation policy to serve as that buffer if that were to ever happen. Now,
right.
A lot of people ask, well, we make sure our vendors are always insured. They always carry their own workers' comp. And I understand that you're doing the right thing. However, there are cases where, either they don't pay a bill or that policy elapses mid-project. All of a sudden, they don't have coverage. So it's really cheap. It's a matter of usually a couple $100 over the course of a year, and it covers a huge exposure. So that's another area that I get a lot of questions on.
Yeah, that was actually my next question was, because we as a management company, and it's different because a lot of our clients, a lot of our HOAs come from self-managed backgrounds. Sure. So when that happens, then, they're using a landscaper who's a gardener. That's just Joe from next door. Right. So in that cases, I think definitely, but it's interesting that even when the vendors are insured, it could still be a risk. That's kind of. It could still be.
Yeah. I've seen it happen before where, someone, I've also seen it happen where a vendor will just show you a fraudulent insurance certificate saying they have insurance when they really don't. So, it's one of those things, kind of trust but verify, and make sure you have a backstop in place just in case. So, I would say 95% of my associations carry work comp, and the 5% that don't, they have told me, against my advice, that they're just not going to do it. So it's something that I can't mandate it, obviously, but I strongly recommend it for every one of my clients.
Yeah, absolutely. And kind of hearing through the reasoning behind it, it makes a lot more sense, right? Like even if they're insured, you never know, right? You never know.
Yep, that's right.
Speaking of you never know, something that's a little bit more scary, storms, water damage, wind and hail, especially in the Carolinas, I'm sure.
Hurricane barreling up the East Coast as we speak.
Yeah, literally. And in California, the fires in others, there are natural disasters that are occurring across the country in all different regions, but really specifically for the Carolinas, what specific risks are relevant, and how can the board protect themselves via insurance of those risks?
Yeah, so the biggest one, Neo, is you nailed it. It's going to be your wind and named storms, tropical storms, hurricanes. That's the biggest exposure down here, just like a wildfire would be to California. Mm-hmm. So the biggest thing I have to consistently, and I continually try to educate my clients on, is wind and hail deductibles and named storm deductibles. So typically wind and hail deductibles are going to be percentage based. So they're going to be based on a percentage of the building's value. Okay. So that, when you see 1 or 2 or 3%, as your deductible on a proposal, that might not mean much, but you have to do the math. What is, 5% of $32 million property, it's a big number. So I have found that, a lot of board members will say, well, it's a percentage of the damage amount, right? That's a common misconception I see a lot of, and no, it's not. It's a percentage of the building's value. So that's a set number based on your building's value. So we see that a lot. So one of the biggest things I try to hammer home with my clients, particularly coastal clients,
Right.
Is the importance of knowing what your deductible is when you're buying it. Because look, and if we're living in coastal states, there's a reasonable chance that you're probably going to have to use that insurance at some point. So, I've seen cases where the deductible is so high that you're effectively self-insuring your roof. There's no way the damages are ever going to exceed that deductible threshold based on the percentage. So, and when clients realize that, it's quite a wake-up call. So that's that's the single biggest thing I see. There's also separate deductibles called named storm deductibles that may be higher for named storms, tropical storms, and hurricanes. So educating clients on that. Water damage deductibles are also, oftentimes separate from your standard property deductible, and oftentimes quite a bit higher. So pointing these things out and really letting the client know what they're buying before they buy it. And one thing I do, on new business opportunities, when someone says, hey, they're looking at insurance options, I always go through and just do, an audit, for lack of a better term, of their current policy. I want to go through and see, hey, has your agent really explained what this exclusion means or what this deductible comes out to? And you'd be surprised how many people say, wow, no one ever explained it like that. I had no idea that I was going to be on the hook for, $800,000 in deductible costs if I had a hailstorm. So that's the single biggest thing. And also I'd say flood is big by the coast. FEMA, flood zones are constantly changing. You might wake up and all of a sudden you're in a high hazard zone based on the way the flood map changed, and that could change your flood insurance requirements. So NFIP, the FEMA administrative flood program, is still kind of the backbone of the flood market, but there are private flood carriers that are kind of coming in a little bit more now. So there are some more options. So making sure you're getting the most affordable option, best bang for your buck with flood is important too. But yeah, when we're talking coastal, we're really thinking flood, wind, hail, named storm, and water. Those are the items we're talking seeing the most potential gaps in.
I see. So when you kind of assess the risk of exposure, does that only kind of directly come from like the national agencies, or is that something that you do or your firm does?
Yeah. So if you're talking about flood zones, there's not a lot we can do about that. That's all administered and mapped out by FEMA. But there are a lot of things that I'm not just here selling you insurance policy. I could have talked about this more out of the jump, but education is my whole thing. I'm pretty active on LinkedIn about just educating clients, educating people in this space about how to protect yourself. And I think that's kind of where that comes into play is, hey, there's we can't control how far we are from the water, right? That's an immovable fact. Like we're 5 miles from the shoreline, nothing we can do about that. But what can we do to protect ourselves?
Exactly.
What can we do to mitigate that exposure? That can include things like having a storm plan, an evacuation plan. Okay, this is, we need to board the windows up X amount of days before the storm hits. Things like that can really, impact your property's, I guess, survivability in a storm. What is the hail rating on our shingles? Are there reinforced materials that we can use to better protect ourselves? By the way, by doing these things, you're also going to make yourself look a lot more attractive in the eyes of any carrier. If I can go to a carrier and say, hey, this property, they just put on a impact resistant roof that's going to last them, 30, 40 years, that's going to look pretty darn good in the underwriter looking at the file. It's going to say, they're protecting our investment, meaning the carrier's investment if they decide to write the property. B, it means they're proactive. So if they just put on a brand new hail resistant roof, I could pretty well infer that they're doing other things to shore up the property to make sure it's protected against the loss. So that's one way that you can really put yourself ahead of the game and save potentially tens of thousands of dollars on insurance premiums.
Yeah. And when boards have, a certain claim history, maybe it's a little challenging claim history. And a lot of HOAs that we have, they're always worried about their renewal, right? Are we even going to get renewed? Is it right? So like, or is the price going to be so bumped up that we can't pay it, or is this insurance just going to pull out of the area, right?
Yeah.
So like, have you come across these associations, and how do you really work with them?
I've come across a lot of those associations. In fact, I've come across those associations. I come across those more often than not. So I am very comfortable operating in this space. So when underwriters are reviewing a property for renewal or for new business opportunities, they're going to look at two things when it comes to claims. They're going to look at severity and they're going to look at frequency. If I tell you that a property, there's a lightning strike that caused a fire that burned down one of the townhome buildings, we call it a shock loss. That's an act of God. That's a freak thing that is probably not going to happen again. Yeah. I can have that conversation with an underwriter, and we can find common ground there. The underwriter's going to say, okay, nothing we can do about that. But they're also going to look at frequency. If that same property has 7 or 8, $5,000 water claims over the past 3 years, now that's a tougher conversation to have because that's a pattern. Underwriters are looking for patterns. They're looking for behavior. So ironically, the larger claims, if it's explainable, if it's a shock loss, underwriters usually can get past that. That's not a concern. But if there's a pattern of claims history, that can be an issue. So when I see those properties come to me that have a challenge claim history, if they do have high frequency, that tells me one thing: we're going to have a harder time finding you affordable coverage options, and we're going to have to adjust our strategy. B, I have to have that conversation with the client and say, hey, here's what's holding us up right now. What are you going to do about it? Okay, so what can we do to make this look better? And can you commit to implementing these different behaviors or practices to insulate your future carrier from some of these claims? That, maybe thinking longer and harder, do I really need to file a claim for this minor water loss, or should the association just eat this one? And a lot of times the answer is the latter. If it's a small claim, don't get me wrong, you have insurance for a reason. You should use it when you need to, but at the same time, in a hard market, which is what we're in nationally right now, you also have to be discerning and strategic about what to file and when to file it. So having those conversations and educating the client on what underwriters are looking for, like you and me are doing right now, can really save the client a lot of headaches down the road. So those are just a few things that I know underwriters are looking at and that I'm looking at as well to kind of form my strategy.
Yeah, it's kind of the same thing with like, a couple of years ago, there was a little, someone scratched my car a little bit, right? Yep. I didn't want to go to the insurance because I knew a couple months later, or maybe right away, something's going to get bumped up. So it's kind of like that same principle, right? Yeah.
Is the juice worth the squeeze, right? Like, is it really, is it really going to be worth going through the insurance process? Sure, I'll get a new, door panel for the scratch on my door, but I'm going to be paying for that door panel one way or another renewal. So does it really make sense to file a claim? So that's a perfect example. I've had that same mental battle myself with my own vehicles, so I understand how that goes.
Yeah, and I'm guessing that with a lot of boards, and I know some boards just kind of don't do the annual insurance review, but a lot of the processes of figuring out, hey, like what should we do for the year after and beyond, kind of comes at these annual insurance reviews. What should the boards really be reviewing this year?
So the biggest thing is going to be, and this is anywhere, is going to be your roof condition. This is where reserve studies can come in handy. Reserve studies, consistently performed reserve studies are my best friend because I can take that reserve study when I'm going to market and say, okay, here's the life of the roof. Here's what it was done. Here's the condition of so-and-so, especially if they're recent. That's huge for me. But also consistently performing those are going to be big for any HOA because it's going to tell them, hey, when do I need to replace this roof? Roof is always going to be the biggest thing. Typically. Preventative maintenance is huge. I understand, that's a big expense and it's inconvenient, but it does have a trickle down effect. So these annual meetings, I think the boards need to be talking about, I think you nailed it when you said thinking 3, 4, 5 years down the road. Yeah. That's the mentality that personally I'm trying to shift in the market, that your decisions now can impact your insurability, not just your rates, but in a crazy market, your insurability in 3, 4, 5 years from now. So I think that is the absolute time and place to be having those discussions. Even little things like, hey, do we have heating or cracking sidewalks? That might not be property exposure, but that prevents a liability exposure. Trip and fall hazards, things like that.
Yeah.
So these are all things. Or have our fire extinguishers in our building. Are they expired? Have they been replaced or recharged? Same thing with fire sprinkler systems. Have they been inspected? Have they had the main drain test run each year? So just things like that. These things all need to be talked about annually to really stay on top of things. If not for insurance, just for the general condition of the property. Everyone wants to live in a nice building, a nice association. So these are all critical things to be thinking about.
Yeah, absolutely. And as a management company, we always try to help with the insurance reviews as well, just kind of pointing them in the right direction. And a lot of times just like going through that process, I don't want to say opening a can of worms, just because I think it's more or less really being proactive about what your what the future holds, right, for your board.
Sure.
Let's talk a little bit about how you specifically work with associations, or how any insurance broker should work with associations, right?
Yeah.
So that they can get a
I
better.
like to think that I have it right, but like I said, you learn new things every day.
Absolutely. So okay, let's say a board member or a manager or board president, homeowner, or whoever, right? They first engage you. What does that process look like from quoting, onboarding, and then I know you do ongoing support, so that portion as well.
Yep. So for me, I usually like to start with an introductory phone call meeting or Zoom meeting like this. I want to get to know the person I'm working with, but B, it's a lot easier to kind of gauge a property when I'm just casually asking questions about it, and they might not have all the information handy, but just getting to know the property like that, kind of tell them what my process is. I try and I tend to take a more consultative approach than I think a lot of other agents do. And that's by design. I just think as insurance advisors, especially in this space, it's important to my clients know that I'm sitting on your side of the table, not across from it. I'm your trusted advisor here, and I'm going to walk you through this step by step. So I like to start out just with an intro phone call. From there, we collect the pertinent information for underwriting. That's going to be the things I just talked about, like roof updates. And of course the nitty gritty of how many units, how many buildings, we'll need your loss history, all that. But also, where a lot of agents I think fall short is when they're working with underwriters, is they don't really necessarily develop a narrative about the property. They kind of just, check boxes on an application, send it over and say, give me a quote. Here's where I need you to be at. Well, I'd say most agents actually operate that. What I try to do differently, and I think, and I've gotten good feedback from my underwriting partners on this, is that I tried to tell the story about the property. Okay, they had a big claim last year, but why? And what have they done since to prevent that from happening again? Things like that. Like I said, just because an association might have some hair on it, from an underwriting perspective, doesn't mean that it's uninsurable. There's a way. And that's obviously, I'm not putting a PR spin on it. We're being accurate, but I firmly believe that every property has a story. And that's kind of what I'm trying to get out of those conversations with the manager, or the manager or the board. So, once that process takes place, presumably we get a quote. It's a good quote. We buy in coverage. And like I said, that's really when the job begins. So we're going to be sending out, our HO6 advisory letters that effectively tell homeowners, what our coverage recommendations are for their HO6 policy. We're going to be mailing that out along with the master certificate of insurance. And we're going to be issuing insurance certificates to mortgage companies. My account manager, Barb, I love her to death. She handles all my cert requests, but I keep her busy with that. She's a rock star. So shout out to you, Barb. But yeah, so we're doing that day in and day out, and just answering general coverage questions, whether it's from homeowners or from their agents. I get a lot of calls from personal insurance agents of homeowners, which I love because I can just meet. It's funny. I've actually developed a lot of really good contacts through that, just getting these calls and just kind of talking with these folks, because we can kind of speak the lingo to each other and we know what we're talking about. But really, at the end of the day, it's just about protecting their clients. So I can really, tell them, okay, here's what the policy covers, here's what it doesn't, here's what you should carry in your policy, and what have you. And then, of course, when claims happen, we're there for that too. So, if that hailstorm comes through and we need to file a claim, let's get it done. So, if the property is local, of course, I'm going to get out on site, meet with the adjuster out there and obviously, advocate for the client. The adjuster does, they do kind of run the claims process, but, it's my job to kind of be your mouthpiece in that space. If I think the adjuster is, generally speaking, I think adjusters do a pretty good job. But if there's a communication breakdown, or if I think something doesn't quite add up, I'm going to advocate for you. I'm going to work for you. So it's that kind of service that I pride myself on, and that has served me well. Again, I don't have a license on it. I'm not perfect at it, but I do my best. So that's kind of a 30,000-foot view of kind of how the sausage is made, at least kind of how I put it.
Yeah, absolutely. And when these claims happen, do you ever have to kind of fight with the actual providers, or do you ever have to kind of really push towards getting a better rate, or is that kind of usually smooth sailing?
Yeah, I would say, look, the claims process gets a bad rap in the media. You hear about it a lot, and there is some truth to that. I'm not gonna blow smoke. I mean, yeah, there are carriers out there that are not giving fair payouts. But for the most part, there have been times where I think the adjuster is not giving necessarily their full credit due to the client, and I will professionally advocate for them. And we're usually, 9 times out of 10, we can usually find a collaborative approach. It's going to make everybody happy. So because when an adjuster is being challenging, shall we say, they're usually leaning on policy verbiage that's in the policy. Now,
right.
The right there is that I might not necessarily agree with their interpretation, and the client might not necessarily agree with the interpretation of that verbiage. So a lot of times there is a middle ground to be found. And I'm far be it for me to stand up for every claims adjuster. I know there are adjusters out there that have given kind of that industry a bad name, but 9 times out of 10, the adjusters I work with are generally fair. And if there's disagreement, we can usually find a middle ground that's going to make everybody happy.
Amazing. So, with a lot of the insurance costs rising, and I know you touched on this as well, when it comes to actually structuring the policies, right? Are there creative and kind of like unique ways where you can structure certain policies where the boards can it really helps the board save financially, but also, without really compromising the safety of their community? Yeah,
I mean, right now in a hard market, and a tangent here, but I do think the market is, I know it's shifting right now. So it is something a little bit, which is really good and encouraging for everybody. So we are starting to see some rate stabilization. But, for the sake of the conversation, in a hard market, I'll be honest, any board's leverage is minimized. Any association, the leverage is just not like it used to be. 5-10 years ago, if we were close, we used to be able to go to an underwriter and say, hey, we need 5-10% credit on this, otherwise we're not going to write the account, and they would fight for it. Now, the shoe's kind of on the other foot. It's the association having to really court the carrier to try to get them to offer a quote at all, whatever the premium is. So, I hesitate to say that there's any kind of shortcut towards not. I don't know, that's not what you're asking, but any kind of way to negotiate a better rate on that front. But I would say your biggest tool in your toolbox is your deductible. And I know no one likes the idea of raising your deductibles super, super high, but I will say for larger associations in particular, and some smaller ones, it might make sense to do so. If you increase your, I was working on an association the other day that they still have a $2,500 property deductible place. And it's a good sized property. I came back and told them, I said, look, we're probably not going to be able to find a carrier that's even going to offer a deductible comparable to that. They just don't exist anymore. They must have been grandfathered in. But B, I know, and I happen to know that cost was a big issue for them. I said, look, we can move the needle on this, but you're going to have to put some skin in the game by increasing that deductible. At least that's how the carrier use it. So that's your biggest outline is your deductible. I would say also outside of that, and I kind of touched on this before, but knowing what underwriters are looking for in terms of loss control. So loss control, everyone's probably more or less familiar with it by now, but it's when the carrier comes out and does an inspection, right after the policy is issued, comes
Right.
back with the checklist saying you have to do this, you have to do this within 30 days, otherwise we're going to cancel the policy. That's loss control. So getting ahead of that, if I can go to a carrier and say, hey, they noticed that there were some limbs overhanging this roof. They went ahead and preemptively chopped them down and got that clear of the roof. That's going to well, first of all, it's going to tell them that the trees are gone. But second, it's going to signal to the underwriter that, hey, this is a proactive board. I might have a little bit more leeway. So I don't think there's any structural, quick fixes to it, but there are certain strategies that you can implement that will yield, I think, more favorable results.
Yeah, and I think that really is the biggest advice that you and I, really the people in the industry can give to the boards. Everyone's anxious about this, the renewal period coming up, and everyone's anxious about really the best answer is, hey, let's do everything we can proactively to make sure that your community is safe, that it's compliant, right, and all the aspects is really covered. Right. And that's going to trickle down to the insurance space.
Nailed it. I think just like I talked about associations and property managers being, helping their clients with preventative maintenance throughout the year. It's no different from insurance. It's just, kind of make sure you're doing the little things along the way, so when renewal time does come up, in this market, you're not going to have underwriters tripping over you to write your business right now. It's just the nature of the market right now. So what can I do to at least catch the attention of a couple of them and be able to have a couple options at renewal. So yeah, it's the little things throughout the policy term. There's no quick fix, but just really going above and beyond to do what you can to make yourself as attractive as possible is the best thing you can do right now.
Yeah, amazing. Trey, anything that you want our listeners to kind of know more about Nesbit Insurance, or how to get in touch with you, whether it's HOAs in Charlotte or across the country, anything that makes you guys a little different? This is kind of like your little elevator pitch moment.
Yeah, no, I appreciate it, Neo. So look, we're taking on clients nationwide right now. We're in a hard market, and there aren't a ton of agents out there that specialize in this space, which is, for me, that's a reason I do it. I see a need for it. And I'll even speak to your business, small HOAs. I think small HOAs have been wildly underserved by the insurance market and by insurance agencies over the years, frankly, because the premiums aren't necessarily as large as they would be with a large client or with a large association. So I think they kind of get neglected. That's not something that we do. We don't discriminate on a property based on its size. We'll write if it's 10 units or 1,000 units. It doesn't matter to us. So that's something that we don't shy away from. Like I said, we do have the capability to write in all. Well, Hawaii's goofy, but we have the capability to write in just about every state. We've been doing this a long time. We have more resources than most. I hopefully, by now you realize my approach is educational based, client focused, and pro HOA. That's kind of where I plant my flag and I advocate for my clients. So if you're interested, I post a lot of content on LinkedIn. That's kind of my medium for getting educational content out there. It's not salesy. It's just tips and tricks for board leaders and property managers to really educate themselves on this stuff. My goal with that is to take, kind of complex topics and boil it down so they're simple and easy to understand and digest. I'd encourage you, if you're up for it, give me a follow on LinkedIn, connect with me, send me a message. If you're interested in a quote, you can reach me there, or you can reach me via email, tgriffy, TGRIFFY @nesbitagencies.com. So that's my elevator pitch, Neo.
Awesome. And I can speak to that. I start my morning with Trey's LinkedIn posts every single day.
I appreciate that. That's the highest form of praise. Thank you.
And it's a great way to start my morning. I can tell you that.
I love it, brother. Thank you so much.
All right. Before we kind of close up, any last words or any one piece of advice that you want to give to board members out there?
Yeah, education. I know I've said it over and over and over. There's a reason I do. Educate yourselves. Take the initiative. Resources, again, I'm pitching myself, but things like there's a lot of good content on LinkedIn. I'm not the only guy out there doing it, but I put a lot out there. Also, your local CAI chapter, in your state is a huge educational resource. Could not recommend them highly enough. Things like me and Neil are doing right now, podcasts, videos. These things are critical. Just listening to two guys in the industry having a casual conversation about this stuff, I think is going to do wonders. That's why I love this medium right here, because it's easily accessible. It's easy to digest. We're doing our best to make complex topics simple, and that's really the name of the game. So education, no one's gonna willingly come out and educate you. You have to seek it out, seek the resources. So
right.
They're out there. So I think ultimately that's going to pay dividends for you and your association. So yeah, I mean, just kudos to you, Neo, and HOA Simplified, for doing stuff like this. Like, thanks for giving me a platform to do this. I appreciate it. But also, thank you for being one of those outlets for homeowners to lean on and find really valuable content like this. I know you guys I've watched a couple of your episodes. You guys are doing a really good job here. It's a really cool thing you're doing.
Thank you so much, Trey. I really appreciate it. And again, education is so critical. That's why we started the podcast in the first place, getting the industry professionals out there. But Trey, thank you again. And to our listeners, thank you again for tuning into the HOA Simplified podcast. And you heard it here. Educate. Please educate yourself, and hope this helped. And we'll catch you on the next time of the HOA Simplified podcast. Thank you, Trey.
Thank you so much. I appreciate it.